Hello dear traders, and welcome back for the evening portion of financial news on Insta TV with me, Anna Kasatkina. By the close of the European trades, the most popular currency pair retreated to its lows hit at the beginning of the new year. Italy again came under the spotlight. Matteo Salvini, Italy's deputy prime minister, criticized the ECB policy, saying that it is not helping with the Italian debt issue. The ECB officials demanded that the European credit institutions spared reserves to cover bad loans during 7 years. Another political confrontation is coming up in the region. Meanwhile, traders await the announcement of the voting results in the British Parliament on the Brexit agreement and start opening trades to sell the pound and the euro in advance. As a result, the euro-dollar pair touched the level of 1.1420. It is worth mentioning that additional pressure on the euro was exerted by the US dollar, which added about 40 pips during the opening of New York session. The index of the US currency retreated to 95.80 after reaching the level of 95.90. However, the enthusiasm of dollar buyers quickly faded after the US producer prices report was unveiled. The indicator fell by 0.2% in November. The weak US statistics only serve as an additional signal to the fact that the Fed is unlikely to raise its benchmark interest rates this year again. There are still fears of a slowdown in the global economy if the United States and China do not completely resolve the trade conflict. It is worth paying attention to the US stock market, which allowed the indices to remain at their high levels. The Dow Jones Industrial Average continued trading near the level of 24,000. Investor optimism emerged after China announced its readiness for stimulus measures. The country's authorities came to such a decision after the report on the trade balance showed a significant decrease last month. Nevertheless, investors are waiting for the transition from words to action. As soon as China starts achieving its goals, the mood of market participants will improve, as fears for a slowdown in the global economy will gradually fade away. And that's all for today. Thank you for watching and see you back tomorrow.